When you are selling to buy a new one, modern financing that some people they use is HELOAN.
Right, so we're going to talk about, in this whole series, we're talking about different ways you can buy one home and sell the other. And one of the ways people talk about this is actually going to be a HELOAN. There's traditional mortgages, taking the sale of one to buy the other, and another one is this HELOAN. So we're really going to dive into the HELOAN and really kind of talk about why this might be the best option for you.
Exactly. Therefore, really what we wanted to talk about first is about HELOANs or home equity loans that you might have heard from your friends.
Which is it? What is it?
Or any mortgage lender. And HELOANs is a form of financing that the homeowners borrow against the equity that they have already built in their house. And this is basically equity that is a portion that you can own outright, no? Mm-hmm. And then what else we can add to this?
Now, basically, it's the value of the home minus the outstanding mortgage balance, right? So that's basically your math. Now, there are features of this one. Now, it's going to be a lump sum payment. Now, typically with this lump sum, since you're buying another home, you're going to use that lump sum to buy the other home. It's going to be a fixed interest typically. It's going to mean that home, for that until you sell the home, is going to have a higher payment. Until you sell that home. But typically, most of the time when we're selling to buy and you're taking out a HELOAN to buy the other home, this is a temporary solution to take your money out of the home, put it somewhere else, and then you're going to sell that home with the HELOAN is attached to it. So you're still selling that home and you're going to plan on paying this off when you sell the home.
Exactly. Before talking about the benefits, let's do our introduction.
Let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
Now we're going to focus on the benefits of the HELOAN that my wife partially actually addressed some of them. The first thing is really interest rate. The interest rate typically lower than the credit cards and unsecured personal items, no?
Right. So it is, of course, if you're on a 3% home loan, I do not want you to get this confused. Your home loan is going to be at 2 or 3%, much lower than a HELOAN is going to be at the filming of this video.
Exactly.
All right, because interest rates are about 7%, but it is going to be lower than that 15%, 16% of those credit cards.
Exactly. The next thing that we wanted to talk about benefit is the tax deduction, because you are paying the interest on that HELOAN and it can be tax deductible. And that's if that fund used to buy another home, which we were talking about.
Now, yes, you can be flexible with this money. If you take it out, you can use it for a variety of things like your home loan, college tuition. But in this situation, we're talking about buying another home. So basically, we're saying that you take out the $250,000, you buy another home, $250,000, and we put that home that was $500,000 for sale. And now for a month or two till it sells, you're going to have a very high monthly payment. However, once you sell it for $500,000 and you already bought the $250,000 home in cash, you are now debt free. So this is the basic point of a HELOAN, is to be able to sell your house to buy another fast.
Exactly.
Now talk about a traditional loan.
Therefore, when we were talking about traditional loan is really a standard way to finance when you are purchasing a home. And there are secure loan where the property acts as a collateral for the loans that you are getting.
Right. Now, this is again about buying and selling, right? So again, what I want to say is, with the traditional loan, if that home is already there and a certain amount of your income is connected to that debt, the debt to income ratio, they're not going to typically finance you for a home based on a traditional loan. So yes, because you have a tradition, if they do, then that's amazing. You're taking the traditional loan out, you can rent the old home, which many people are going to choose to rent it or sell it. But in this situation, we're selling to buy, right? So if you can qualify for a mortgage without having to sell, you're in a much better position than most people.
Exactly. Therefore, now we want to talk, you don't want to talk about feature of the...
No, I want to talk about sale.
Exactly. Now we wanted to utilizing the sale proceed. No, this is involved selling the current property that you have to finance the purchase of the new one that you wanted to purchase in the same city or another estate, to free up some cash for other uses.
Now, when we bought and sold our home in the same day, we did this. We used the benefit, the sale proceeds itself, to where we set up our sale, or we bought new construction. We knew that we were going to close on such and such a date, and we were working as hard as we can in order to sell our home where we were in order to make sure it was going to sell. And then we ended up closing the same day, so the money went from one to the other, which makes it easy. We did have to spend 4 hours in Target, but that's a different story. But besides the 4 hours in Target hangout, the money went in cash to the lawyer's office. We never really touched it, but that cash was our down payment for the next home.
Exactly, which brings us to the actual feature of utilizing the sale proceed, which, as my wife said, the first one is the liquidity, that you converting the sale proceed of the real estate as an asset into the cash for purchasing another one.
Now, there might be capital gains that you would owe on this home if you owned the home for less than a certain amount of time. So there are some capital gains to be aware of if you haven't owned the home for very long. But make sure it just really depends on your situation and your state and where you are.
Exactly. Now, the features and the benefit, we talk about the features, but the benefit of the utilizing the sale proceed, number one is a no debt,
Right,
because it provides funds without you incurring the new debt on your new mortgage.
Right, so you can use this cash to upsize, downsize, or even use it for a non-real estate investment. So you can actually, the money is released to you. So it is flexible in that way. What about equity access?
Therefore, equity access, also the releasing the equity that you got from the home, you can use it for other ventures, like, for example, your retirement or any financial planning that you have for you and your family. That could be also very beneficial.
Right. So basically, we just talked about some modern options that people use. That HELOAN I've seen done, traditional mortgages I've seen done, and I've seen we did the own cash to cash. Well, we didn't get to do cash without a mortgage, but we did have, by talking to our lender, we understood what we needed to do to make sure we were getting the house that we wanted. So that was always important, to make sure that the finances are in order, because when you are looking to sell a home to buy another home, the key thing is how we're going to pay for it and the timelines in which we have to do things for you.
And then don't forget to connect with us, Alan Victoria Pinder, real estate agent in North Carolina, specifically Pitt County, North Carolina. We'll love to help you in your real estate journey, and watch these videos, and we connect with you next time.